Welcome, everyone, to the Complete Aviation Solutions Deep Dive, number 89. We've been looking at quite a stack of recent source material today, all focused on a really significant development in Australian aviation. We're talking about a major airline's plan to return to the public market. Okay, let's unpack this. Our mission, as always, is to quickly pull out the most important nuggets from these sources, the key figures, the context, and maybe what it all means.
Yeah, and there's definitely a lot to get through in this material. The big headline, obviously, is this airline planning an IPO, an initial public offering.
Right. So based on what you've seen in the sources, what kind of scale are we actually talking about here? How big is this offering?
What the material shows is they're targeting a raise of about 442.8 million US dollars, which, translates to roughly a $685 million Australian.
That's a considerable amount. And how's it structured? I mean, who's actually selling shares here?
Good question. The primary owner right now, that's Bain Capital, they're the ones doing the selling. The plan is to offload, a chunk of their holding, about 30% of their stake. And the shares themselves, they're being offered at a fixed price, $82.90 each. That covers a total of 236.2 million shares being put on the market.
Okay, fixed price, 236 million shares. So if they're doing that, what does this tell us about how the market, or at least how they think the market, is valuing the entire airline right now?
Well, what's fascinating here is how those numbers stack up. That IPO price, the $82.90 per share, that puts the company's valuation at around $2.32 billion. And that's on what they call a fully diluted basis, so considering all potential shares out there.
Okay, 2.32 billion. Got it.
But the sources also highlight the company's debt. Its debt is sitting at $1.31 billion.
Oh, right. That's always part of the equation.
Exactly. So when you add that debt onto the market value, you get the enterprise value. It's kind of the total value of the business as an operating thing. That comes in at $3.6 billion. Gives you a fuller picture, really, of the total cost to acquire the whole operation, including all its obligations.
Okay, yeah, that makes sense. So we're talking a multi-billion-dollar entity overall. How will the ownership structure actually change after Bain sells off this chunk then?
Well, Bain Capital's stake, it's going to drop quite significantly from around 70% currently
Yeah.
down to 39.4%.
Wow, okay. Big shift.
Yeah. And the material also notes another key shareholder, Qatar Airways. They intend to just keep their existing 23% stake. No change there.
Interesting. So putting this into the broader perspective, how significant is this deal in the Australian market right now? Is this common?
Well, if we connect this to the bigger picture, the reports we looked at point out this IPO is actually said to be the largest in Australia so far this year.
The largest this year. Okay.
Yeah. It follows a large real estate investment trust IPO, or REIT, that happened back in December. And it's probably worth noting the material mentions that previous deal.
Yeah.
Its shares have actually traded down about 30% since they listed.
Ooh, okay. So that provides some maybe recent context for investors looking at this one.
Exactly. Some context on maybe the appetite for new listings right now. And interestingly, this airline IPO itself, it's actually been in the planning stages for over 2 years.
2 years? Really?
Yeah, but it was paused before, mainly due to global market volatility, market wobbles. So
Yeah.
it seems the feeling is that conditions are, favorable enough now to go ahead.
And thinking about the airline itself, it has a pretty dramatic recent history, doesn't it? The sources mention that.
Well, absolutely. The material definitely recounts its collapse back in 2020. That was driven largely by the huge impact of COVID restrictions on travel, obviously. It ended up going into voluntary administration, which you can think of it as sort of a supervised rescue process, a bit like Chapter 11 in the U.S. Similar goal, anyway.
Right. And Bain Capital came in then.
That's right. Bain acquired the airline out of that administration process. That was about 5 years ago now. And the price tag mentioned is $3.5 billion. But importantly, that included taking on the existing liabilities.
Okay, so after that whole rescue and rebuild, where is the airline focusing its operations now? What do the sources say about its strategy?
Their main focus definitely is domestic travel within Australia. The data cited gives them something like a 34.4% share of that market, which compares to their larger rival, Qantas, presumably, who had about 37.5% share back in March, according to the reports.
So pretty significant domestic player. Any international plans?
Yes, the plans detailed do include resuming some long-haul international flights. It seems they'll be leveraging their partnership with Qatar Airways for that.
Right, that makes sense with Qatar staying on as a shareholder. So for potential investors keeping an eye on this, what's the timeline? When is this all happening according to the sources?
The key dates highlighted are the closing of the institutional book building quite soon, and then the plan is for the shares to actually start trading on the Australian Securities Exchange, the ASX, on June 24th. The process involves this front-end book building thing. It's basically where the big investors indicate their interest and what price they'd pay before the official prospectus gets the final regulatory sign-off.
Ah, so it's about testing the waters up front.
Yeah, essentially, gauging the demand before the official launch.
Okay. So what does this all mean when we pull it together? We've unpacked the numbers. It's a pretty significant IPO, targeting nearly $500 million US, structured around the current main owner, Bain, selling a large piece of their stake, and that results in a multi-billion-dollar valuation for the airline itself once you account for debt. We also see this happening in a specific market moment, maybe influenced by how recent IPOs have performed. And it's all against the backdrop of this airline's own dramatic history administration, rescue, and its current strategy, which is heavily focused on domestic travel, but with those international plans simmering.
Yeah, and I think this raises a really important question, for anyone watching this space. Given that this airline's business is so deeply tied to consumer spending and travel confidence, particularly in that domestic market, how much will the sort of broader economic conditions and maybe evolving travel patterns influence the success of this listing? And, the airline's journey after the IPO, it feels like a key variable that the sources sort of hint at, but don't explicitly answer.
That's a great point. Definitely something for everyone listening to consider. Thank you for joining us for this deep dive.